Good afternoon. Let's do some business. We are doing it live right now, weekday afternoons at 4 o'clock. We get right down to business here with the news-driven hour right after Ben Shapiro. Then just before the 790 KBC News Blitz with Randy Wang at 5. Mottek On Money, live on the air here, 790 KBC, streaming live online worldwide at kbc.com. And the on-demand Mottek On Money podcast, kbc.com, Apple, iTunes, and all your favorite podcast platforms. The inflation number spooking investors today. All three of the major stock market averages moving lower after that unexpectedly hot consumer price index reading for last month, now casting doubt on whether the Fed will cut interest rates 3 times this year. The Dow coming in for a closing loss of 422 points. The S&P 500 down nearly 50, and the Nasdaq down 136 points. We saw gold slightly pull off its record high, falling about $14 to $2,348.40 an ounce. I'll talk about the recent run-up in gold with precious metals and rare coin expert Barry Stubler later this hour. The Consumer Price Index up 3.5% in the month of March. That came in hotter than expected. Shelter and energy costs drove the increase for the most part, with energy costs of 1.1% after jumping 2.3% in February, while shelter costs were higher by 0.4% of the month and up 5.7% from a year ago. So when somebody asks you what's up, still the answer is nothing but the rent. Following the report, traders pushed the first expected rate cut to September. The increase in inflation in March, largely driven by that rise in gas prices we've seen, especially here in Southern California, of about 40 cents a gallon just over the last month, and persistent increase in the cost of rent. I'll talk about that with Mark Hambrick coming up later this hour. He's the senior economic analyst and Washington bureau chief at Bankrate.com. And by the way, that hotter-than-expected March consumer price index reading means that investors cannot rule out the possibility the Fed is not finished raising interest rates, according to former Treasury Secretary Lawrence Summers. We'll talk about that as well. By the way, the Social Security cost of living adjustment could be 3% in 2025 compared to a 3.2% increase this year. That forecast from Mary Johnson, an independent Social Security and Medicare analyst. COLA, the cost of living adjustment, is calculated based on the Consumer Price Index, for which more heavily weighs costs for transportation, food, apparel, and other expenses that would be bought by urban non-retirees. We also got the notes from the Fed's last big policy-setting meeting. The Fed at the last meeting generally favored a cautious approach to reducing their $7.5 trillion balance sheet. In Fed speak, according to the notes, Fed officials said they did not want to repeat the 2017-2019 balance sheet runoff, which ended after turmoil in the money markets. Oil futures moving higher today, with tensions rising in the Middle East, prices finding support late in the trading session on speculation that Iran will soon wage an attack on Israel following an Israeli strike on the Iranian embassy in Syria earlier this month. Very serious developments happening in the Middle East, which we're following closely here. The price of oil settling at $86.21 a barrel in New York, up 98 cents. Brent crude in London moving up $1.06 to $90.48 a barrel. By the way, bond yield shot higher today with the yield of the 10-year note at 4.55%. That looks like a new high for the year, and that's the one that impacts the fixed-rate mortgage rates. Looks like cryptos are on a tear this afternoon. Bitcoin up more than $1,000 now, $71,036. We do have some breaking news in the crypto world today, with Uniswap Labs receiving a notice from the Securities and Exchange Commission that it could soon be charged with violating federal securities laws. That, according to the company's CEO Hayden Adams in a post on X, formerly known as Twitter, this afternoon. Uniswap is a decentralized cryptocurrency exchange that allows buyers and sellers of cryptocurrencies like Ethereum to find each other on a peer-to-peer network that does not rely on funds being transferred to a centralized exchange such as Coinbase. Shares of Honest Company, based here in Southern California, pulling back today after the company lost its rights to use the name and likeness of founder, actress turned mega entrepreneur Jessica Alba. Honest shares pulling back more than 7% today to $3.45. The stock, by the way, is still up about 5% since the start of the year. Joining us live now on your money, the markets, and the economy. Big day today. Money manager Ken Winans, president of Winans Investments, market historian, author of Investment Atlas 1 and 2, and Forbes magazine contributor. Ken, thank you very much for taking the call here this afternoon.
My pleasure, Frank. And it was interesting hearing all the talk about inflation because I just did 2 drive trips back and forth between the Bay Area and Las Vegas. And the one common theme wherever you stop, whether it's in a restaurant, getting gas, or anything, people are all very concerned about food and gas prices. So it's not just Southern California. It's felt across the swath of rural areas, urban areas, even across state lines. So this is a serious situation that I think we're all just going to have to use the old phrase, hunker down for a long winter. Inflation is very, very tough to get rid of. The Fed is going to find it as difficult as they did in the 1970s and before then, post-World War II. It's like rust on steel or rust on metal, very hard to get it to go away forever.
All right, so it rattled the markets today. The expectation was that the Fed would start lowering those benchmark rates, which, by the way, are still at 20-plus year highs. So consumers are feeling it there, too, with record high credit card rates, some 30-plus% now, which is having an impact. Of course, we're seeing higher gas prices. When you go back and forth from California to Nevada, I'm sure you notice a big difference in those prices, Ken, with the price of about 40 cents a gallon here in the Los Angeles area just in the last month or so. So what's your outlook here on the inflation story and the Fed's next move?
Well, Frank, I have to make these decisions every day. My firm manages, a lot of money in stocks and bonds and work with commodities. And in doing that, I've been saying for a while that I do think the Federal Reserve is going to be very, very patient. They were extremely late coming to the party to wrestle this inflation mess under control. It's not to necessarily rub it in their face, but you have to realize where we came from before you can go forward. And they were behind the curve then. I know they don't want to play the ping pong game that the Fed did in the 1970s. And you have to remember the Federal Reserve's job, and especially in an election year, they're trying to just hold true to what their mandate is, which is deal with inflation and make sure employment is strong. And as long as the employment numbers nationwide, not just geographically, but in the aggregate across the country, remain relatively strong, I think the Fed is going to be very hard pressed to say drop the rate. So I've been telling my clients, you need to operate on what if rates do not come down this year. The comment that rates would go up, that would only really come from a serious spike in inflation that was sustained over, I would say, a quarter. That would force the Fed to take action, and I think that's very unlikely. But at the same time, that is one of the pieces you have to look at. I would say that we have producer price index, which is the other big gauge on inflation, and I think you're going to read something a little different there. Where we're reading about rents and fuel prices here, I think you're going to hear on the other end with companies, it's going to be wage prices. And I think wage push inflation is going to be something that companies are going to be dealing with for the next couple of years. And that they simply have to, whether it's government mandated wage increases like California did with fast food workers, or it is industry wide where they're just trying to retain talented, hardworking employers or employees, and they're just having to pay more. And then throw in their healthcare costs. You mentioned COLA. I'm hearing repeatedly that healthcare costs, especially for small business people, it's killing them right now. I mean, those costs are going up wildly, and they're just trying to deal with all of it across the board. But we're a long way from being out of the woods, Frank.
Very interesting. And as we've noted on this program, curiously, it's been hitting record highs lately, just at a time when we were told inflation was easing, but apparently it's not easing. So gold is hitting record highs, pulled back slightly today, right, after a week-long run-up. Right now at $2,353 an ounce here at last check. Ken, what's your outlook on where gold goes from here?
Well, it's gold, silver, and I'm also going to throw in the industrial metal copper. They're all moving up very, very strong during this market. Now, part of it is seasonality. I'm a big believer in looking at, the seasonal trends to it, whether it's production or in the case of crops that grow, the growing season. But the simple fact is this time of year is usually very, very strong for silver and gold. I think that you throw a couple of things into the gold situation. There's a lot of people, I think it's a vote of confidence. People around the world are beginning to buy more gold. I have people that I haven't talked to in a while who have never talked about gold before ever are saying they want to add it to their portfolio. So I think that's a trend going on. Also, India, certain countries in the world, India and China particularly, people do buy a lot of gold just because there's such a lack of confidence in their own currencies. But I think that this is a breakout trend in gold, and I am by no means a gold bug, but I am a trader. And when I see things like this on my models, this tells me that I think gold is a lot higher to go, assuming nothing else changes. Frank, I would just say one other quick thing that I think is very important. You know, when you talk about volatility during this month, let's not forget, most of us are having to face the tax man next week. And there's a lot of money leaving the market right now to pay those tax bills because they had such wonderful gains really over the last 16 months. So I wouldn't necessarily take any dramatic moves in volatility in the markets right now without taking a good hard look at, you know, how much money has net left the market. And you can expect some of that money to begin to flow back in there after the bills have been paid. And so, you know, April is just a very weird month when it comes to stock investing, and you got to be a little careful on trying to make too many dramatic changes right now.
On the air live with money manager Ken Winans, and in the crypto world, I mentioned that story here breaking this afternoon. Looks like the SEC is going to go after another crypto platform here. In the meantime, we're seeing Bitcoin make a big move back on the upside here, up 1,013 to 71,036 here at the moment. Any thoughts on what's happening in the crypto world now?
Well, you know, it's interesting. I went through a certification program on crypto. Once the SEC allowed Bitcoin and Ethereum to basically have ETFs traded off of them for any investor to have, plus the Commodity Future Exchange, the Chicago Mercantile Exchange, has been having Bitcoin futures contracts. Again, these are normal trading vehicles in the normal world without ever really having to touch crypto if you're scared of it. But what you're talking about here, you have to get into the weeds to understand the exchange thing, and it's a little more than we can cover today. But where you have the centralized exchanges like Coinbase or Kraken, where and not to say they don't have their own set of issues, but the point is when you're dealing with decentralized exchanges, I think that this is an area that is going to concern the SEC. They're very sensitive to what goes on here, and I think that it's safe to say we're going to probably see more action like this as we go through the year. I know in talking with regulators, a very good friend of mine has an investment firm. They're going through an SEC audit right now, and according to what he told me, excuse me, the number 3 question they were asked is, do you talk about crypto digital assets with any of your clients? So the fact that the SEC is asking money management firms and wealth management firms this question tells me that it's very hot on their radar, and firms are gun shy. They don't want to risk getting sued by their clients or SEC sanctions. So I think that those kind of things give us a moment of pause. But the deregulated exchanges, unless you're an expert in crypto, you really need to be careful before you jump into that world.
All right, so we are seeing a Bitcoin back above 71K here, and you've probably seen all these wild predictions, and the same thing with gold. When something hits record highs, and all of a sudden everybody's talking about it, and everybody piles in often at record highs. We certainly saw that recently with that when Bitcoin hit a record high in the last month or so, and now we're seeing the same thing with gold. It's just kind of human nature when it's in the news and hitting record highs. That's when everybody's getting in.
Frank, you know, there's an old saying in my business, momentum begets momentum. And whether it's a stock like NVIDIA, whether it is, you know, really anything. I mean, look at what's going on with cocoa right now. For anybody who has a sweet tooth, you better save your money because it's going to get very expensive to buy chocolate and any other types of sweets because of the cocoa or the cocoa shortages out of Africa. So when these things begin to happen, it is like a locomotive. It just picks up steam and it goes down the road, and it's hard to stop it. Unfortunately, if it moves too far too fast, that turns into a bubble, and then the short sellers look for these situations and they just pounce all over it. And these groups are primarily in the hedge fund world. So it also is tied to the fact that that Bitcoin, especially the price of it, there's talks about, just like they are with stocks, how do you split the price to have it become more attractive to smaller investors? And so whether you're talking about crypto or stocks, it's the same issue. You're trying to make it attractive to your potential investors. So, I'm certainly a believer that the situation with crypto, the fact we talk about it as much as we do, and all the other financial channels around the world talk about it, and it trades 7 days a week, 24 hours a day. There's nothing quite like it out there. And there's a lot of people that are beginning to say, hey, I need to take this serious. But like the old Latin phrase, Frank, caveat emptor, let the buyer beware. And you better know what you're doing before you commit hard money to it.
Certainly, and just human nature. Usually one of the worst times to get in is when something's at an all-time, when people are not talking about it, like silver was kind of dead in water for a long time, but that too has made a run recently above $28 an ounce, and right now just below 28 an ounce. We'll be talking more about the precious metals coming up here later this hour now that they are getting more attention. At this point, Ken Winans, let me ask you the big question here once again. Where are you putting money now and or taking it off the table?
Okay, and it's really an interesting question to ask right at this moment in time but there is seasonality to the stock market, and it's literally from May through the end of September is statistically been a lackluster period of time where it doesn't mean things go down, straight down, but it does mean that a lot of the momentum is gone, that the market's going on a summer vacation, as I used to call it. So wherever you commit money right now, you have to find those things that are still performing well. And I still see a lot of money coming off the table from the hot stocks of the last 15 months. And you're seeing it go into some downright boring areas. Utilities were a prime example of this. Utilities typically don't do well in an inflationary cycle, but they've had a heck of a run over the last month or so. So I think you're going to see a broadening of the market as we go through really this time up until the election cycle. The other thing I would say too, Frank, there's a lot of people, we're calling them the Biden stocks versus the Trump stocks. And I know that a lot of people that think that if Trump wins the election, that the oil and gas stocks are going to take off. I happen to agree with that. I think the policies will radically shift toward drilling and certainly oil and natural gas in parts of the country. But at the same time, you want to be very careful about not placing a bet too soon on who the next president's going to be. But what I would say is this. If you were to ask me, the number one threat that I'm looking at is going to be what happens to the tax cuts next year. If you have a situation where the Federal Reserve is not lowering interest rates and we're looking at taxes increasing next year as the tax cuts that were enacted in 2016 basically expire, that could be basically a perfect storm for the market. And that's something I'm just telling people to be very cautious about, that although this year is probably fine, part of my job is to look ahead and where are the threats? And that's what I'm primarily worried about. What is the government going to do with those taxes?
Ken, thank you very much for that very thoughtful and thorough assessment as always. That is Money Manager Ken Winans, president of Winans Investments, market historian, author of Investment Atlas 1 and 2, also Forbes magazine contributor. Ken, thank you very much for coming to the line this afternoon.
Thank you, Frank. Have a good night.
Thank you very much. And right out to the freeways we go now on 790 KBC. Friends, let's be honest. Sometimes we find ourselves or a loved one dealing with a massive injury caused by a terrible accident by no fault of our own. Sometimes it's simply being in the wrong place at the wrong time. We're good at preparing for earthquakes and fires, but let's not forget to prepare in case we're involved in a major accident. It's critical to know who to call first. Clark Fielding became an attorney to help you in a crisis. Fielding Law is focused on justice and resources for you because they understand how the system works and what to do in the most horrific situations. I always say to put the Fielding Law team in your phone under the word accident, so all you have to do is hit that button. Believe me, you'll feel a lot better having set this up for yourself and your family. 833-88-SHARK. That's the number, 833-88-SHARK. With the population exploding and increased vehicles on the freeways these days, be proactive, prepare for the worst, and expect the best. But if and when you do need help, call Clark Fielding and his team of sharks at 833-88-SHARK. That's 833-88-SHARK. Or go to clarkthesharklaw.com. Again, that's clarkthesharklaw.com. Mottek On Money continues here, 790 KBC, down across the board for the stock market today. The Dow down 422 points at 38,461. The S&P 500 down 49 at 5,161. And the NASDAQ down 136 at 16,170. In reaction to the hotter-than-expected inflation number, which came out first thing this morning, I'll talk about it. I'll talk about it with Mark Hamrick coming up here in just a few moments. The Consumer Price Index, that key inflation reading, up 3.5% in the month of March, higher than analysts had expected and marking an acceleration for inflation. The yield in the 10-year note, meanwhile, is pushed higher to 4.55% in reaction to that news and expectations now that the Fed will at least delay cutting rates this year. Bitcoin, meanwhile, on a tear this afternoon, up more than $1,000, above $71,000. Now Ethereum up about 40 at 3,552, and Doge at 20 cents. The price of gold pulling back from its all-time high. We'll talk about gold coming up later this hour with Barry Stupler, based here in Southern California, precious metals and coin expert. Gold down about $20 today, back to $2,335.66 an ounce. And silver down 7 cents at $27.98 an ounce. NVIDIA, the Magnificent One, moving higher today in the face of all this, up nearly $17 at $8.70 and change. And now the latest news for you right here on 790 KABC. Mottek On Money continues here in 790 KABC. Coming in hot, that reading on inflation out first thing this morning ahead of the opening bell on Wall Street. Inflation rising to 3.5% as of the month of March, according to the latest report from the Bureau of Labor Statistics. The Consumer Price Index came in hotter than expected. Stocks reacted by pulling back, with the Dow down 422 points. Let's bring in one of our experts here, Mark Hamrick, senior economic analyst and Washington bureau chief at Bankrate.com, veteran radio broadcaster and business journalist at the Associated Press for many years. Mark, nothing like being live on the air with you, and it's great to reconnect with you on the air here this afternoon.
Well, the honor is mine, Frank. Thanks so much for the kind words and for having me.
Thank you very much, Mark. And you're following the inflation reading we got today, and right there in Washington as well, which I'm sure created quite a splash there with Bidenomics so much in focus these days. Take it from the top and tell us what we need to know about this latest inflation reading out this morning.
Sure, Frank. Well, of course, consumers know this story all too well. We are the ones who have to bear the burden of inflation. And there's much talk, as you know, Frank, that inflation is, quote unquote, coming down. But we note that, for example, over the past year, the headline number here is up 3.5%. And we go back to January of 2020, consumer prices have risen 20%. So it's a bit of a word game to say that inflation's coming down. It's just that it's not, raging as much as it was before, but it's still enough to irritate people. It's still enough to cause problems for consumers, businesses, and headaches for central bankers. And so you, of course, acknowledge that this is a hot potato, so to speak, politically, and Americans' dissatisfaction with the economy is largely centered around inflation, which isn't going away as a problem.
Right, and as you well know, when inflation goes up, especially when gas prices go up, consumer confidence goes down. And here in Los Angeles, we've seen gas prices jump about 40 cents a gallon just in the last month or so. It appears that there is upward pressure on inflation, not downward pressure, given what's happening with oil prices and the current Middle East crisis. Energy prices up, 1.1% last month after a 2.3% increase in February. Rents, of course, also up even higher. And we're watching that continue here in Los Angeles, where affordability and availability are big issues. What's the outlook on both of those important parts of the economy?
Well, first of all, with respect to, let's say, energy prices, as you know, we're in a globally connected economy, and Middle East tensions translate to upward pressure on energy prices. And, for the near term, it doesn't look like that issue is going to go away. People are probably going to take to the roads as much as they possibly can this summer. We're headed into the vacation season, so there's going to be plenty of demand for oil. The question is, do we have sustainable supply? And we'll pray that we have no, hurricanes or tropical storms that knock out production in that regard, and of course have no substantial interruption in supply abroad, even while the U.S. is, of course, the key producer of oil these days. With respect to rents, that's an interesting one, Frank, and I know that you're aware of this, is that as we look at real-time measures of rent, and this was talked about today by Lawrence Yun, the chief economist for the National Association of Realtors, the real-time metrics of rents have been coming down. It appears that it takes a while for this to filter into the consumer price index. That isn't just something that people have talked about today. It's something that Federal Reserve Chairman Jerome Powell talks about as well. And so home prices are continuing to rise, though. So we may have different dynamics going on with housing affordability, and you're there, dare I say, at ground zero in the lack of housing affordability in the state of California and the Southland there in particular. Food is another interesting one, which is somewhat nuanced, where I think on the headline number on food, we're up about 2.2% year over year. It's higher than that if we're eating out, though. And, of course, Americans are continuing to do that, sort of making up for lost time lost during the pandemic. Within the categories beneath the headline on food, essentially you had about half higher and half lower. So I think it's reasonable to expect that we can see some relief there. But, Frank, I think one of the most important takeaways here, as we see gasoline prices higher and transportation costs broadly higher, is that we are reliant on transportation and gasoline for essentially almost every aspect of the distribution chain or the supply chain. And so if that filters on through continuing to rise or remaining at a high level, that's going to continue to cause pricing issues, even if we have some relief on some of these other fronts.
All excellent points, and it should be noted that so-called core inflation reading, which we also got today, which strips out the food and energy, remained at 3.8%, nearly double the Fed's target of 2%. So in this election year, obviously, the economy is the number one issue, and the president was touting that so-called Inflation Reduction Act and all that. So Bidenomics back under scrutiny as far as this inflation is concerned. Tell us more about that.
Well, I think, first of all, the White House doesn't want to use that term anymore, and I think for good reason. It wasn't an effective strategy, and there's been some interesting reporting today about a former White House chief of staff who essentially had some remarks that were released that weren't intended for public distribution, where he's saying that essentially, the president needs to stop talking about cutting ribbons at bridges and sort of take on the inflation question head on. And yet when he was at the podium today, he had frankly, a misstatement of fact where he said essentially the administration inherited inflation. That's one that he just simply can't make with a straight face. What did happen was we had a pandemic that did cause supply chain disruptions, mismatches between supply and demand, and then the great reopening of the economy. But apparently that wasn't part of sort of a number of talking points that he is prepared to present. As we look at the University of Michigan Consumer Sentiment Index, as you know, Frank, one of the two major data sets that intends to try to measure consumer sentiment, it's very clear, and this has been borne out in our bank rate data as well. It turns out that people who identify as Republicans are more critical of the president for his handling of the economy, and Democrats are more forgiving, and independents are somewhere in between. But, of course, consumer sentiment and consumer spending are two different things. And if there's been one among many surprises about let's say, the performance of the economy, along with its resilience and the strength of the job market, is that consumer spending has sort of continued to be fairly strong. And I would say sort of doing well despite the fact that people keep saying, like the job market, that it should slow down. And we might get into that this summer if we continue to see this inflation data coming in a way that gives everybody a headache and a shot to the wallet. But so far, so good with consumer spending, relatively speaking.
Certainly, we've seen that dramatic rise in the capital markets in the first quarter, but now a pullback here, especially today in reaction to what we've been talking about, this inflation reading and expectations the Fed may not cut rates anytime soon. In fact, the former Treasury Secretary Larry Summers predicts that they might actually raise rates in the face of these hotter inflation numbers and more upward pressure given what's happening with the oil prices these days. What are your thoughts about when the Fed might lower rates at this point, and consumers, of course, dealing with the highest credit card rates in history right now?
Well, that's right. The average rate, according to Bankrate, new offers for the best qualified users, those with high credit scores, continues to be at 20.75%. And that's essentially the best you can get out there. And so those who don't have credit scores that are so high will have an interest rate that is higher. Right now, if you look at Fed funds futures, the best bet for a rate cut seems to be now going to the end of July, where at last check, they put the odds of a rate cut July 31st at 74%, and certainly not at the May 1st meeting, certainly not at the June 12th meeting. I think we obviously need to see a series of disheartening inflation readings for the Fed to begin to embrace even the thought of beginning to raise rates, because if anything, the Fed does not want to cause a recession. And central banks in the United States have had a pretty good history, not in a good way, of overcompensating and therefore causing recessions because of tightening too much. And Jerome Powell knows that there has been an instance in history where the Fed took its foot off the brake too early, but also where essentially they hit the brake too hard, and they're trying to get it just right. So we won't get firm indications on when another rate cut would come from the Fed until the June meeting, because they just gave us that at the last meeting a few weeks ago. And at that time, the expectation, as reported by members of the Federal Open Market Committee, was that there would still be 3 rate cuts this year. If anything, the timing's been pushed back, and probably now you need to probably be somewhere between 2 and 3 rate cuts if we're trying to sort of read the minds of Federal Reserve officials. But they still have a lot of data to get through, not only between now and May, but also June and then that end of July reading. And the economy may have yet more surprises for us, Frank.
Yes, indeed, Mark. Well, thank you very much for taking this call this afternoon and your excellent reporting on the inflation story here today. Mark Hamrick, Senior Economic Analyst and Washington Bureau Chief at the authoritative bankrate.com. Also, as you can obviously tell, veteran radio broadcaster and business journalist. Mark, thank you very much. Great to speak with you here, and hope to speak with you again very soon.
Anytime, Frank. Thanks so much. You have a wonderful evening.
You too. Thank you very much. And right out to the freeways we go back here in Southern California on 790 KABC. Mottek On Money continues here in 790 KABC. Good afternoon. Gold has taken on a new shine lately, as we've been noting here. Hitting record highs lately. This in the face when we were told inflation is supposedly easing. Well, it turns out inflation is not easing. Based on the consumer price index we got the first thing this morning, inflation still running hot. Gold has been running hot as well, pulling back a bit today, but still near its all-time high, around $2,348.40 an ounce here at the moment. Somebody who knows all about this on the air live with us now, Barry Stupler, precious metals and rare coin expert at Mint State Gold, based in Woodland Hills. Barry, thanks very much for taking the call here again. Since we last spoke, gold has gone even higher. Give us an update on how the gold price is looking here today. Try to get Barry back on the line here in just a moment. We see gold right now hovering at around $2,335.66 an ounce. Silver, by the way, which is also hitting new highs for the year, not quite record highs yet. That's in fact, it's way off its all-time high, which was around $50 an ounce. Right now, we're looking at silver down 7 cents at $27.98 an ounce. Gold's been moving up ahead of today's reading on inflation we got today, which showed the consumer price index running hot at 3.5% in the month of March. That came in hotter than most analysts expected and also marked an acceleration for inflation. Barry Stubler, give us an update on how that gold price is looking here now.
It's an interesting time. I mean, last Friday they were concerned about the non-farm workers number, and it came in a lot hotter than expected, which is a negative for the gold. Gold dropped down like $15 in the first 10 or $15 about the first 10 or 15 minutes, and then it turned around and set a record high. The same thing is going on today. We got the CPI, like you said earlier, and it was a lot hotter than expected also. It should have been negative for gold. Gold got hit in the first probably 15 or 20 minutes, turned around on a dime, rallied back up. This market does not want to fall. There's just a lot of buying in here. That's just very aggressive buying, both gold and silver. Silver is up almost $2 in the last week. So we're seeing a substantial amount of physical precious metal buying. People want to own gold and silver in a precious metal form as opposed to owning stocks or mining shares or something like that.
Right, so people, meaning retail buyers, right? It's been getting a lot of attention, and as we've seen in the past, once something like this hits record highs, that's the time just human nature, oh yeah, I want some of that too. And so, yeah, retail, including Costco, apparently doing big business now with gold, and you're probably keeping busy too. What kind of demand are you seeing these days?
Our demand is you have to understand, Costco just sells gold. We buy and sell it. The Costco buyers may have a problem when they want to sell their bars because Costco won't buy it. So they need to get into an item that is more negotiable. A gold bar is not as negotiable as a gold eagle or a gold maple leaf, and the spread between the bid and the ask is a lot tighter. So if gold goes up $20 or $30, they're going to be in a profit position where bars might have to go up $50 for them to get even, presuming they can find a buyer. So the amount of activity we're seeing is substantially higher than what we saw even a month ago, because people want to physically have it, physically own it, and obviously it's still the world's oldest inflation hedge, and it's a way of preserving wealth for one's family, and we're just seeing more buyers right now.
Very interesting. So you're on the front line of all this, coming face-to-face with the buyers. Do you feel that money may be coming out of crypto and going into gold, or vice versa? What are you seeing in the real world?
Well, I'm not thinking it. I'm seeing it. I'm having clients who bought some crypto a year or 2 years ago. If they were able to get their money out, they're transferring it back into gold. Some have a problem getting their money. It was lost in a software problem or something like that. So yes, the amount of new buyers from either crypto, the stock market, we're seeing a lot of that. People are switching into an asset that's historically holds value and is easily negotiable and saleable in a trading market. We post a weekly market report on our website every Monday, and we actually put out a blog every day to keep people abreast of what's happening in the precious metal markets, and that's zoomed. I mean, the amount of demand or the amount of readers that are coming on is just showing us there's just a substantial amount of interest. And many of our dealer clients who buy from us are telling us that their retail clients are doing really well and are very active too. So we're just right in the middle of it. Like you said, we're right in the middle of it, and it's exciting at this particular time.
Yep. On the air live with Barry Stubler. Barry, you want to get your crystal ball out? Where do you see gold and silver prices go from here?
Well, gold should break 2,400. It will probably test it once or twice, but break 2,400, and I'm looking for 2,600 by year end. As far as silver, 30 should be a shoo-in. I mean, right now it's around 27.80. It's $30 an ounce should be an absolute shoo-in for silver, because there's again a demand for that also. But the leader is gold. The absolute leader in the precious metal is gold, where platinum and palladium aren't doing very much, and central banks are very actively adding to their gold position. Every time, like I said, gold drops a little bit, all of a sudden the volume goes up and the demand goes up, and we see it spike up again. So yeah, I see gold, like I said, by 2,600 by year end, and silver should easily be $30.
All right, Barry, we'll keep the line open to you as we follow this closely here, of course. Barry Stubler with the Mint State Gold in Woodland Hills, and, of course, a precious metals and rare coin expert extraordinaire. Thank you very much, Barry, for joining us. Coming up next is the 790 KBC News Blitz with Randy Wang, and I'll be back tomorrow at 4 with more Mottek On Money on 790 KBC.
Mike Carruthers shares little pieces of intel and interviews you can use to improve your life on the Something You Should Know podcast.
The next time you're looking for a job and have to write a cover letter, here's some advice from Skip Freeman, author of a book called Headhunters Hiring Secrets. Add a P.S. to the bottom of that cover letter. That can actually increase the chances of that letter being read by up to 75%. Some people actually glance down and read the P.S. first.
Something You Should Know. Search on YouTube or wherever you listen.